Hello, guys, welcome to Exquisite Books. My name is Basit Ali, and today in this video, we are going to talk about accounting equation. So, what is an accounting equation? An accounting equation can be defined as a fundamental principle of accounting that represents the relationship between a company's assets, liabilities, and equity. In the visual form, it looks like any typical equation, like assets on the left hand side and the sum of the liabilities and equity on the right hand side. And as a key rule, always remember this equation must balance. Now let's define one by one what are assets, what are liabilities, and what is equity. Assets are the economic resources that are controlled and owned by the entity. The entity takes the future economic benefits from the use of the assets. Assets are primarily classified into two types that are current assets, which are also called as short lived assets, or the non current assets, which are called as the long lived assets. Some of the common examples of assets can be cash, accounts receivable, inventory, property, plant, and equipment, bank, and land. Liabilities, on the other side, are the obligations of the business towards the vendors and the other third parties. Just like the assets, liabilities are also classified into two types that are current liabilities that have to be settled in a short period of time, like 12 months, and the non current liabilities that have to be settled in a period which may exceed 12 months. Some of the common examples of liabilities are accounts payable, loans, taxes payable, and accrued expenses. Accrued expenses are also expenses that the business have incurred, but they are not paid yet, so it is a liability. On the third comes equity. Equity is the amount of the investment in the business by the owners. It is the sum of the money that the business owes towards its owners. Some of the common examples of equity are share capital and retained earnings. Share capital is the amount of the capital that has been issued and paid by the owners. For example, if a business has 100 shares and each share is worth $10, so this means that the business has a share capital of $1,000 that is issued and paid by the owners. This $1,000 is the investment by the owners. Another common example of equity are retained earnings. The retained earnings are the accumulated profits that are carried forward by the business each year. If a business earns profit each year, then that profit from the income statement is transferred to retained earnings and are presented in the balance sheet under the equity of the company. So that was the brief explanation about these three. I have also made a detailed video about each of them. So you can also check out those videos. This will help you to establish a more better understanding about the assets, liabilities, and equity. What are their types, how they are classified with the help of examples. Now let's try to understand the accounting equation with the help of an example. Before we start, always remember there are two sides of the accounting equation. Each example and each transaction is going to have two effects. So let's start our example. John started a restaurant business, and he invested $5,000 into his business. Now let's analyze how we can convert this transaction into an accounting equation. First, we will list down the accounting equation. Now we will analyze this example. This example has two effects. The first, cash is brought to the business. The second, owner has made an investment. Since the cash is introduced, this will increase the cash by $5,000, and cash is an asset. So we will present the cash under the assets, and we will mention $5,000 under the cash. Now, on the right hand side, We will mention owner's capital because this is the capital that is introduced by the owner. And we will mention $5,000 under owner's capital. And this balances our equation. On the left hand side, our assets, that is the cash that is raised by $5,000. And on the right hand side, we have the owner's capital under equity that is raised by $5,000. Let's take another example. In this example, John asked his friend to lend $2,000 for his business. This transaction will give two effects. Number one, the business will receive cash of $2,000. So, cash is an asset. We will present cash under the assets on the left hand side. The other effect of this transaction will be the liability. As this $2,000 is a loan from John's friend towards John's business, so this $2,000 is a liability of a business. The business has to repay this loan. So this loan will be presented under the liability. And this will increase the liability of the company by $2,000. So the net effect of this transaction will be the cash will increase by $2,000 and the liability will increase by $2,000, and this balances our accounting equation. Let's take a final example. In this example, John purchased a dishwasher for $1,000 for his restaurant. As it is a restaurant business, so let's assume that this dishwasher is an asset. So, what will be the impact on the accounting equation? For this specific example, the effect will be only on the asset side. This transaction will have no effect on the liability or equity. So, what will be the impact? The cash will get reduced by $1,000 as we purchase the dishwasher. And as the dishwasher is an asset, so the equipment will increase by $1,000. So, this reduction in cash by $1,000 leads to increase in the equipment by $1,000. Note that it is not necessary that any transaction is going to have impact on the left hand side and on the right hand side of the accounting equation. Sometimes the net effect can only be on the one side, just like in this example, where an increase in one asset led to decrease in the other asset, and the net impact is zero, and our accounting equation still balances. The standard form of accounting equation is assets is equal to liabilities plus equity. Assets are on the left hand side and liabilities and equity is on the right hand side of the accounting equation. But the accounting equation is the same just like any other equation. There are two ends, the left hand side and the right hand side. And we can rearrange accounting equation in the other forms as well. Like equity can be equal to assets minus liability, and liabilities can be equal to assets minus equity. In this way, we can find any missing element. Let's try an example. If the value of the assets is $5,000 and the value of liabilities is $1,500, so what will be the equity? In this case, equity will be equal to assets minus liabilities. 5,000 minus 1,500 is equal to 3,500. So the value of the equity will be $3,500. Let's take a little more comprehensive example. In this example, instead of having the total values of the assets, liabilities, and equity, we have their different subclasses like subtypes. So we have accounts payable, accounts receivable, taxes payable, loan, cash, and retained earning. Now we have to group them together under their proper category. In order to do so, you should have a good knowledge about assets, liabilities, and equity. You should know what are the type of the assets, what constitutes of assets, what constitutes of liability, and what comprises of the equity. Now let's try to arrange them under their proper category. Accounts receivable and cash will fall under assets. Accounts payable, taxes payable, and loan will fall under liability, and the retained earnings will fall under equity. If you sum the assets, the total is 6,000. If you sum up the liabilities, the total is 4,000. And if you sum up the equity, the total is 2,000. So total assets are 6,000 and the total of liabilities and equity is 6,000. So this balances and satisfies our accounting equation. The accounting equation is also called as the representation of the balance sheet. Let's visualize a sample balance sheet of a business. On the left hand side, you can see there are assets that are categorized as current assets and non current assets. On the right hand side, there are liabilities that are also classified as current liabilities and long term liabilities. And then it comes equity, and it is also subcategorized into capital stock and retained earnings. Now, if you see on this balance sheet, the total of the assets on the left hand side is equal to the total of liabilities and equity on the right hand side. So, this matches the accounting equation. So, we can say that the balance sheet is the visual representation of the accounting equation. And this concludes our video for today. I hope you guys liked the video and thanks for watching.